Hello and welcome to the HI UK Select monthly update for November 2025. This was quite a challenging month for the fund, I think largely due to the unhelpful background of the UK budget, which was delivered right at the end of the month, but we had quite a long period from the summer onwards of speculation about which taxes would rise and which tax breaks might go. In the end, you might argue the budget was relatively benign. The higher tax rises were really pushed back in, they were back-end loaded. And in the short term, there was not a big new negative for markets. But overall, it didn't feel like there was a radical change. So there isn't a radical change, perhaps in UK sentiment at this stage. Maybe just a bit of a relief. So what worked and what didn't work for us? The two main hits on our long book were Beazley and Auto Trader. And these were similar. While Beazley's an insurer and Auto Trader is a second-hand vehicle sales platform, they both announced periods of increased investment. The market wasn't expecting the extra investment, the impact that has on profits, and the share prices have reacted negatively. Better things in our long book were led by SSE. SSE issued £2 billion worth of equity in the month, a large placing to fund expansion of its network, investment in the network. And that went down really well with investors, which I think is a good sign for the UK market. We'd been invested prior to this, the share price reacted well, and we did more in the placing. Marketing materials distribution business for Imprint, which has a large US slant, delivered slightly ahead of numbers, and that was taken positively as people were concerned about US spend on marketing. So that was another good one for us, a relatively modest position, but it was good to see upgrades. In our short book, we had a couple of good winners. Kroger said they were going to close some of their fulfillment centers operated by Ocado Technology in the US. That was pretty negative for Ocado, and people again questioning the long-term strategy here. First Group, which had been a slightly painful short, First Group's a transport business, earlier in the year, has actually been giving back quite nicely for us in the last few weeks as the company reported lower passenger numbers and rising costs, which is a bad combination for them. Negative shorts for us, probably led by ITV. ITV announced they were in talks with Sky about the sale of the core TV business. This would leave them as a studios-only business. And that was taken pretty well by investors after the kind of indigestion around the placing of the Liberty Global stake. So that was a slightly painful short for us. Silver miner Fresnillo also went up with the silver price. So it was very much a mixed bag, and we came out slightly on the wrong side of that in terms of overall returns. A slightly disappointing month for us overall, and largely due to stock picking alpha, probably focusing there on the long book. We're working hard to improve the long book stock picking, of course, and we remain pretty confident we've got the ability to do that. There's plenty of opportunities. I think the budget's probably created some welcome short-term stability in UK markets, but it's a pretty volatile background, and people's views on the long term in the UK may change quite quickly. So we need to be nimble, and we need to be careful about where we're placing investors' money, but we'll keep focusing into the year end and look for a positive end to the year. At this point, I'd like to wish all our investors a very happy Christmas, prosperous New Year. Thank you again for your support.